Fearless Disease.
Stocks starting off the final month of the year lower following a strong holiday week that put the S&P within 1% of a record high. Investors are growing more certain the Fed will cut interest rates by 25 basis points next week. Now they're looking ahead to the rate path in 2026 and just who will replace Fed Chair Powell when his term ends in May.
Is he your Fed chair? Are you any close on that right now?
I know who I'm going to pick. Yeah.
Oh, tell us. Kevin Hassett.
I'm not telling you. We'll be announcing it.
All right, DeRoy, I don't know my grammar apparently, but
Economics.
Oh, my economics. So let's talk about economics. I know maybe a little bit more about that. Okay, we got this whole Fed race thing, and you can weigh in on who you think is going to be the Fed chair. I don't know. The president says he knows. He probably does. Maybe he doesn't. How much does it matter, though? You know, it feels like all we ever talk about now is affordability. The Fed is a big part of that. Is this a really, really midterm making decision event that's happening here?
Well, I mean, traders, most traders, they're betting at 87% on a December's Fed cut after Davish Power kind of whispers. He's been talking about this for a while. And I mean, stocks drifting to records high over the last few months. But these Trump tariffs, they could flip this party upside down very quick if this continues.
Well, it could be. Look, I think if Kevin Hassett is the pick to replace Jerome Powell as chairman, that would be very positive. I think he's a solid economist. I think he believes in robust economic growth. I think he'd put an end to what we've seen under Jerome Powell, which is this sort of Phillips curve idea that as soon as the economy picks up and growth kicks in, inflation's coming, so you got to beat it back down with a stick and raise interest rates. And so if we get anywhere above 2% growth, oh my God, we're panicking. Let's raise interest rates and basically choke off the economic growth. I think Hassett believes in economic growth. He's not going to take that approach. He seems modest about what the Fed ought to focus on, which is basically price stability and full employment. I think he believes in a strong dollar. I don't think he's going to do what so many Fed chairmen have been, which is sort of the national stockbroker, get involved in every economic decision, put their fingers in places they shouldn't be. And I think one thing that I hope he does is audit the Fed. That institution's been there since 1913. I think he ought to open the books and see what's been going on there for 112 years. And he seems like just the kind of guy who takes sort of a Doge approach to the Fed, find out what it's doing that it shouldn't be doing, put an end to it, save the taxpayers money, and give us the opportunity to grow and expand in this economy.
You know, that's an interesting.
That's very true, because what it really means is the low rates, that's going to equal a lot of cheap money that'll flood into crypto and tech. Bitcoin is down, at least down to 85K this morning. So Bitcoin will be seeing 100K eventually again. But that's only if PCE inflation cools to around about 2.8%. And that's going to be expecting that it may do that tomorrow. That's what I think. Do your own research, but that's what I think.
Interesting point, Dagan. What do you? Hassett doesn't seem like the kind of guy who would be radically different as Fed chair. Neither does Kevin Warsh or a lot of the names that are in the mix, even as Scott Bessent.
I don't think it'll make much of a difference who's in the chair. I think the person that's in Fed chair it just wears a mask. That's what I think. They're gonna continue the same thing every single year, depending on the president. Is gonna go a little bit higher or just a little bit lower, but it's not gonna make much of a difference who's gonna be in that Fed chair.
What could the new Fed chair do that would be meaningful?
Watch he lie about something. I don't think it's gonna make much of a difference.
In terms of helping to deal with especially the dynamic we've seen over the past few years where too late to deal with inflation. I don't know, maybe too late to deal with the fact that you've got a deteriorating jobs market. What do you want to see out of the next guy?
Somebody who communicates a great deal less to the public.
Less transparency. Interesting.
That is.
Less transparency is not going to do much. Basically, in layman terms, what I think she's saying is talk the way that she wants them to talk. Because another person would say that he's already transparent enough. I don't think it's going to make much of a difference, but...
Is be inscrutable. Let's go back to Alan Greenspan. So Tom Philpson was talking about this, that the Federal Reserve the idea that the central bank can prop up the job market, or fight inflation with a small interest rate cut or hike is just patently absurd because of the lag effect. That the Fed cannot fine-tune the economy by a quarter-point cut or raise, period. And because there are long lags. They can manage the balance sheet, and Larry Kudlow has brought this up, so they're going to stop running off the balance sheet. And because of the stress, and I'm not going to get into the nitty-gritty, but because of the stress in kind of borrowing in the financial system, quantitative easing or buying of bonds and even mortgage-backed securities is on the horizon. The Fed's balance sheet is still multiples of where it was before the financial crisis. That is not the Fed's role to basically pump up asset prices galore, which has benefited the wealthy people.
Not necessarily. She may say it pumps it, but it's not going to just benefit just the wealthy. I mean, we get some of the same information just like anybody else, but everybody chooses, well, most people will choose not to just act on it. That has nothing to do with the wealthy, the poor, the middle class. I don't think it has nothing to do with it at all. Just some people, they choose not to hear, they choose not to listen, and they choose not to take action. I mean, my full prediction is it's that cuts are going to happen. Dow it hits 46K by the end of the year. That's my prediction. I think it's going to hit 45K by the end of the year. We got 2 more weeks left in the year, and I guarantee, or I think, I can't say guarantee, but I think it's going to hit 45K since I've been watching it. No cut on any hot data, and the Bitcoin, of course, I said it earlier, is down 85K. But stack down, I would stack right now, or most people are going to regret it. It's hit down to that 85K, but statistics show at least within 2 years, it's going to get up to 250K. I know it 100%. It just goes down for people to get all panicky, and some people want to sell and get out of Bitcoin, but you want to be able to buy as much as you can right now. At the bottom, at that dip down, I guarantee it'll pump back up a little bit. Let's hear a little bit about what she has to say next, and let's wrap this up.
People who own stocks and bonds and crypto and you name it. But what the Fed has done in this cycle of raising rates, by fighting goods inflation, the price of things has created an affordability crisis because people in this country borrow money. They, homes and say auto loans, your credit card debt, those are like front and center in terms of people's own kind of affordability problems. And the Fed has created nothing but a problem. And very obviously, Jay Powell was fixated on politics when he had the supersized Kamala cut right before the election last year in September.
More gish galloping. Okay, that's her personal attacks on the Fed chair right now, Mr. Powell. That's what they all do the same thing. They're gonna tend to the audience. If they didn't feel like they 100% agree with the president, they may sway a little bit to the right or a little bit to the left. But the big picture is gonna be the big stockholders, the people that are gonna continue to buy on the dip. I'm betting right now. I'm betting still the cut. It's gonna cut a little bit lower, but it's gonna raise by the end of the year. So right now, what I would say is still loading tech ETFs, and if this week continues, it's gonna continue to load up. Loading up means just if it dips down, that means you just start loading up. But let me know what you think in the comments, man. Maybe you think it's gonna cut, or do you think nope, we're gonna keep on going up higher and higher? Appreciate everybody rocking with me. We'll see y'all tomorrow on the next one.